Bank stocks or financial stocks have been one of the worst performing sectors in 2020, mainly because of the global issue putting strain on the whole sector with loans, deferral mortgages, the oil collapse, and there's a lot really going on behind the scenes that's hurting these banks fundamentally. But does this mean it's time to sell out of your bank positions and not really pay attention to this industry? Well, Buffett seems to be doing so. He seems to be cutting out some of these positions, and he made some significant sales in financial stocks here in the last quarter. And what I found interesting was that in the last shareholder meeting, Buffett also said that they don't really trim positions at Berkshire, but ironically, we did see them trim some positions here from their filing. So this could mean that it's the beginning of them actually liquidating out of their positions completely, and they just have to do it gradually over time because of how large their positions are. So I wouldn't be surprised, guys, if in Q2 here that they're going to be selling a lot more bank stocks, and in the next filings report we see them pretty much exit a lot of these companies. So keep a close eye on that. That could definitely move these stocks significantly, both up or down depending on what Berkshire and Warren Buffett does here. But either way, in this video what I want to discuss is some of these positions that he liquidated recently, and I'll give you my thoughts on what's going on here as well. And I know you guys enjoy Buffett type videos, so all you have to do is hit that like button down below, show your support for the channel, and subscribe if you're brand new here as well. Now the biggest deal of them all was Goldman Sachs. We can see historically that Berkshire has held a large position in Goldman Sachs, which is a position that they entered during the Great Financial Crisis over a decade ago. In the most recent filing, they shocked investors when they disclosed a massive sale of majority of their position, which can be seen on the graph here. Buffett cut his position in Goldman Sachs by 84%, which meant he cut his number of shares from 12 million shares to 1.9 million shares. And as of today's price, as of recording this video, this means that the total value of his position in Goldman Sachs now sits at around $385 million, which is down from $2.4 billion. It was honestly surprising to see Goldman Sachs cut out here because Buffett has been a longtime fan of this company, but it appears to me that Berkshire is gearing up to completely close out of this position during this current quarter. Now, Goldman Sachs was by far the biggest reduction here out of all the banking stocks that he had, and the remaining stocks that we're going to go through right now were cut by around 3% each. Synchrony Financial was the next bank stock that he cut, but this isn't your typical bank because this is also a player in the private label credit card space. But I personally like to classify this company as a bank here because of the industry that it's in and because they do consumer loans as well. So you can see that the reduction in their stake in this company was by around 3.24%, and this means that Buffett cut his position from around 20.8 million shares to 20.1 million shares. Now, it's not a huge amount right now, and it's not too concerning. However, it is something to make note of. The stock is down near 50% from its all-time highs, and you can see it's a fairly volatile stock in general over the last few years. The global issue just accelerated the selling with a very sharp decline in the span of a couple of weeks, but it has slowly staged a recovery since. Since this was only a 3% cut, I'm not too concerned here, and this is also a relatively small position for Buffett in general at its current valuation of around $450 million. All things considered though, it's not really a big concern here right now, and this position could have just been trimmed because of the recent volatility, which resulted in Berkshire owning too much of the business that it wasn't comfortable holding. The third biggest financial stock sale here was JPMorgan Chase, and this took me by surprise. JPM is one of the best run banks in my opinion in the world, and I like this company as an investment myself. They cut their stake in JPM here at Berkshire by 3.03%, which again is a small amount in the grand scheme of things, but the question is, does this signal that they'll be selling a lot more in Q2? If that's the case, investors will want to know why, and at this point, it's still unclear as we know Buffett has traditionally been very bullish on these banking stocks. The stock is down nearly 30% off its highs and is what I would consider a premium company, so it's rare to see discounts like this in a stock like JPM. That being said, with everything happening in the economy currently, this company is fundamentally affected with its revenues and profits, and the drop is somewhat justified, at least in the short to medium term in my opinion. Buffett reduced his stake here in JPM from 59.5 million shares to 57.7 million shares, which now puts their investment at a value of around $5.7 billion. So guys, this isn't a small investment per se, but it is concerning to see them trim out of this stock as well, which is one of, like I said, the best run banks in America. Once again, this raises a red flag to watch closely in coming months. Now, funny enough, they actually did increase their stake in one bank stock. PNC Financial was a company that they actually bought more shares of here, and they increased it by 6.08%. And this was a big move considering that they cut other banks like JPM, Goldman Sachs, and Synchrony. The position has remained consistent over the last few quarters, but I guess they saw some value here during the past quarter when we saw some extreme volatility. The stock is down, like JPMorgan Chase, near 30% off its highs, so it's not like it has been a strong performer either. So I'd be very curious to hear their reasoning for buying this banking stock while simultaneously cutting the others. And what's even more puzzling is that they didn't really make any moves with other banking stocks that they own, like Bank of America or Wells Fargo, which does surprise me. And again, it really leaves me confused here as to what's going on behind the scenes. Why are they trimming some positions? Why are they buying into certain other positions? And why do they continue to hold other positions like Wells Fargo, for example, when all these companies play in the same sector? On top of these moves, they also closed out two positions in the quarter completely here. Phillips 66, which is an oil company, and the Travelers Company, which is an insurance company. So really in this last quarter, there was a lot going on at Berkshire behind the scenes. Their business and Buffett's real model and mentality really is that they buy stocks and they try to hold them forever. As long as the business doesn't change fundamentally, they're going to continue holding these stocks. But in the last quarter, they made a lot of sales here, and some of them were small sales, but still sales nonetheless. This really goes against their motto, and in recent months we've seen them sell airline stocks, oil stocks, bank stocks, insurance stocks, and it really makes you wonder as an investor, did they see something coming that we don't? Is there another stock market crash coming that could potentially fundamentally affect those businesses permanently moving forward, which is why they sold out? Or is there another reason why they're selling these stocks? Don't really know, and we'll have to wait for some sort of interview here from Buffett to really understand these moves. What's also confusing is that they trimmed their stake in Amazon, and this makes no sense to me because Amazon is one of the strongest businesses right now in this economy. So to trim out of this stake here, even if it's very small, doesn't make a lot of sense. And I know it's not Buffett directly selling or managing this Amazon stake. It's one of his other peers working at Berkshire, but nonetheless still goes against the company's motto of buy some more on good value, and just continue holding forever. Now, I only covered a handful of companies that they sold, and you can see a full list here of every single position that they trimmed or sold out of in the quarter, and it was quite a bit. Like I said, we don't really know if it was Buffett directly who was selling these stakes or someone else at Berkshire, but this typically goes against their long-standing motto of buy and hold forever. Also, as a contrast here, guys, this is all that the company bought in the quarter. PNC, Delta Airlines, and United Airlines. And as we know, they later ended up selling their stakes in Delta and United in the quarter and took big losses on those positions as well. So there's some interesting stuff going on at Berkshire for sure, and investors seem to be losing confidence in the company, with their stock price still down over 20% off their highs as of recording this video. This is all thanks to poor decisions that were made recently around airlines specifically, which resulted in big losses for them. Of course, they couldn't have seen this global issue coming, no one could have, but to see them exit a position so quickly is really unheard of, especially when it was at such a big loss. Nonetheless, the question we need to answer in this video is, with Buffett selling all of these bank stocks, is this something we should be concerned about, and should we be selling our bank stocks here in 2020? Now, like I said, I believe these banks are fundamentally changed and affected here in the short to medium term, and we don't really know if they will ever get back to how they were before. The first reason is because of lower interest rates. We've seen the Fed drop interest rates to virtually zero, and these banks will not be making a lot of money here from these low interest rates. And if rates do end up going in negative, which is somewhat expected now, that's going to hurt these banks even more. The second fundamental change is because of the oil crisis, as many of these banks have exposure to oil companies, and if these companies end up folding, which could happen to some, especially if demand doesn't pick back up and oil prices continue to remain low, then these banks will have to write off big losses, which is not a good thing for them. The third fundamental change is around mortgage and housing, because many people can't afford to pay their mortgages right now because they are temporarily unemployed, which could eventually be permanently unemployed depending on how the economy recovers, and these banks are offering to defer mortgages, which is lost revenue in the short term. This once again will affect their revenue and profits directly. So because of these core issues, I think that these bank stocks, Wells Fargo, JPMorgan Chase, Bank of America, you name them, they're going to be hurt fundamentally for at least the next few years until we see some sort of recovery in all of these sectors moving forward. We need to see interest rates start to pick back up at some point. We need to see housing stabilize and people being able to afford houses once again because they got their jobs back. And of course, we need to see the oil industry stabilize so a lot of these oil companies in the US don't have to file for bankruptcy. Now, for me personally, I'm watching JPMorgan Chase and Wells Fargo very closely. I think both of these stocks are providing some good value if you're optimistic on the future of this industry and if you think that these companies can recover in, say, 5 to 10 years from now. I don't think that what they're going through right now is anywhere near as bad as what they went through in 2008, 2009. I don't think that there's a real chance of bankruptcy here for any of these banks, but I do think that they're going to be fundamentally affected and their profits and their revenue and all their metrics really will be changed for the foreseeable future. So I may continue adding and dabbling into these stocks here as time progresses. Not really that keen to put in a massive position right now because there's no signs of things really turning around for these businesses. But traditionally, remember that during recessionary times, banks are typically one of the hardest hit sectors. But in the past, for most of them, they have recovered to their previous highs. Now, I do want to close off with a quote that Buffett actually said during his last shareholder meeting here, which really speaks volumes and gives a lot of confidence for the banking sector. Buffett said, "I think overall the banking system is not going to be the problem during the global issue." But then he did go on to say that if economic difficulties become severe enough, even strong banks can be under a lot of stress, and we'll be very glad that we got the Feds behind them. So even Buffett here says that he likes the banking sector still, but if the global issue continues to get worse and the economy does not recover like we're expecting, that we are going to see these banks struggle. But the good thing is that we have the Fed backing them up. So the chance of failure is low, but there are going to be consequences from all of that Fed intervention. So maybe what Buffett is doing here with him selling some of these banking stocks is just bracing for the worst case scenario. Maybe he does see a realistic possibility of this whole sector considerably shrinking over time and never getting back to their prior levels. But really, guys, at this point, it's still all speculation. We'll have to wait and see if there's an interview on this. And when there is one, I will make sure to let you guys know on this channel here and create a video on that as well. Guys, let me know in the comment section down below if you're investing in banking stocks right now and what your thoughts are on this industry as a whole. I'd love to hear from you. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.